Hello, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Thursday, May the 15th, 2008. The headlines out of Switzerland this morning read, CPI April slow increase helped stocks and raised investors' risk appetite. The yen eased broadly on Wednesday as a slow increase in the U.S. consumer inflation report for April boosted stocks and raised investors' appetite for risk. The CPI briefly caused traders to sell the dollar, but analysts said it did not change the market's view that the Federal Reserve's cycle of interest rate cuts was almost over. The dollar-yen last traded around 105.17. The euro-yen gained to 162.66, while the Canadian yen retraced to 104.68 after posting a intraday high of 105.58. The euro-dollar was flat at 154.67 after posting an intraday low of 153.96. The U.S. CPI rose to 0.2% in April, slightly less than the 0.3% forecast by market analysts. The CPI rose 0.3% in March. Speculation that the Fed is done with cutting borrowing cost, having slashed its key lending rate by 325 basis points to 2% since mid-September, has supported the dollar, and analysts said this view has not changed. The U.S. interest rate futures showed the Fed would raise the benchmark federal funds rate by 25 basis points by the end of the year to 2.25%. They also priced in a 92% chance that the central bank would leave rates unchanged next month. The sterling dropped to a near 3-month low against the dollar after the Bank of England, in its quarterly inflation report, said British prices would shoot up this year, which many believe may delay interest rate cuts. If British inflation continues to heat up, this will have a negative impact on the broader economy while keeping the central bank wary of cutting rates, which often promotes growth. Traders in the U.S. session were surprised by the Eurozone's GDP numbers. The dollar traded slightly lower in the European session between the ranges of 154 and 155. The Fed commentary remains optimistic regarding the current state of the U.S. economy, but hesitant to state that the credit crisis is over yet. Surprisingly strong economic data was released in the Eurozone. The GDP growth was higher than expected year-to-year at 2.2% versus the 1.9% that was expected. The Eurozone CPI year-to-year was in line at 3.3%, down from the prior reading of 3.6%. A slowly moderating growth rate will give Trichet more breathing room to combat inflation, which should keep any significant move in the euro-dollar under wraps. In the U.S., jobless claims came in slightly higher than expected at 371,000 versus 370,000. The Empire Manufacturing number declined to a minus 3.2 from a 0.6 in April. The U.S. market is waiting on the remaining U.S. data, the Philly Fed, and the NAHB Housing Market Index. Last month's Philly Fed was overly pessimistic, and we should see a slight recovery in May. However, this data will reflect little evidence regarding the health of the U.S. economy. Precious metals showing a slight rally, and crude oil followed commodities higher on light trading in a quiet market. Even with negative economic news in the short term, the market remains bullish on the notion that the Fed will pause in August. This concludes our news for today. We'd like to thank you for being patient with us through our technical problems this week. We do thank you for viewing, and we're hoping that this helps you with your trading. I will be posting later a special report. This is usually information that we provide only to members of our Traders Training Center, but we thought we would release some of it to you to give you an idea or a preview of some of the things that we do there. We would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center and also the link to our Yahoo forum, which is also called Succeed in Forex. So stay tuned for our special broadcast. Until then, have a great trading day and happy pipping.